Good morning, everyone. Happy Thursday, February 18th. I'm Mark Phillips from Harvested Financial, and we're here to take a look at the markets, talk about some option strategies, and figure out some ways to go out there, think about the options markets as ways to enhance your portfolio and generally generate income. So let's talk about MSTR today. That's what I'm looking forward to talking about in just a minute, looking at what they're doing with Bitcoin and how we can lean into some vertical strategies. However, got to acknowledge how much the markets are down this morning. So it's the first time in a while that I've been able to take a look at these and see that, wow, SPY's off $3, IWM's off $2, VIX is up $2 itself. And the Qs are the biggest loss leader out here, going down $4 or $1.21. So yikes, a little bit of red in the market. You know what? That's healthy. That happens. It's time that we keep hitting all-time highs. We've been seeing less and less variance overall in the markets. To actually see a move where we're moving more than 1% isn't all that wild. So happy to see this kind of action in the market. It's what allows them to function and find their price. So red is not necessarily bad, especially with the options markets where you can do so many different things. So let's talk about MSTR. Bitcoin, of course, all over the news. Bitcoin continues to push some of the all-time highs, trading around 52,000 right now. But the darling of this is going to be MSTR. And we're going to look at a low-cost synthetic that will lean into Saylor's long Bitcoin plays. So why are we thinking about that? Why are we thinking about being long MSTR as a Bitcoin play? Well, first of all, of course, Saylor has something like 30% of the balance sheet invested in Bitcoin. He's one of the leading lights of companies, encouraging companies to move part of their treasury reserves into this currency. So, they've recently even compounded this play by issuing over $1 billion of debt at 0%. So originally they offered something like 700 million, totally oversubscribed, and now they're up to over $1 billion. 0% for him to go out and buy more Bitcoin. He had something like 71,000 coins before. Obviously that number is going to continue to rise. Another interesting thing that we've seen is some of the bullish options activity. So active markets here. Over 10,000 contracts have traded a day over the last couple of days, and we continue to see people buy some of these far out of the money calls. Something like 600 of the 1,900 strike calls expiring to tomorrow traded. And of course, like I mentioned, the Bitcoin playbook. This is Saylor's idea and vision about companies using their treasury reserves to purchase Bitcoin. So this leads a lot of people to want to be bullish on MicroStrategy in the future. Obviously, the prices are relatively elevated, so we want to think about doing this using options in a defined risk manner. So I'm going to go ahead and pull up my screen, and let's take a look at some of the action in MSTR. So what I want to lean into here is we're taking some of the vertical strategies, and we want to look at how to be synthetically long the stock for a relatively cheap price. And we can actually accomplish this by using two different spreads. One, I'm going to sell a put spread, and one, I'm going to buy a call spread. That leaves me with a defined risk short on the downside and with a capped risk upside debits call spread. So with MSTR trading around 930, I'm going to sell something a little bit out of the money. We could look at something, call it down $50. And if we go down $50, I'll sell the 880 and do a $50 vertical there. So I have a $50 vertical right there that it looks like we can capture around $8 for. Actually, I'm sorry, I'm on the wrong expiration. We want to be looking out to March. So we want to go down to the 880, down $50 to the 830, and it looks like on that $50 vertical we can capture around $26. So about half the price of that or of that max loss that we're going to capture there. So of course, $50 vertical. If stock goes all the way down below 830, our risk is capped at that level, and we would lose $50 for every spread that we did here. We've collected $25, so our gross loss would be $25 on that position. We're going to collect that money and now use it to finance buying a call spread on the upside, and that gives us that synthetic long position on the upside. So I'm going to again go $50 out of the money, buy the 980 call. So we want to get long this call because that's going to give us that bullish upside exposure. So remember, I have about $26 to play with here that I collected, and if I go up to the 1030, well, conveniently, that actually is an equidistant dollar amount, a spread that's also could be worth up to $50, but this spread is only trading for around $16, maybe a little bit less. So the upside call spread that I'm buying here is only going to cost $16 compared to the downside $50 vertical put spread that I sold and collected $26. So these markets are very wide. The markets are something like $35 wide here. That's kind of crazy. Getting in there, execution's always going to matter. Execution quality, execution quality, execution quality. Can't preach it enough. Harvested Financial loves it. That's all we think about here. So if you can get into this around the midpoint, you're going to collect around $10 for this trade almost. So you're going to collect $10 to have this bullish MicroStrategies position on. And I'm going to pull up a what if to show you exactly what that's going to look like here. So if I expand this, we'll see that I have very much a position that looks like long stock. As the value of MicroStrategy stock goes up, my position value is also going to go up. I'm capped here though. I'm capped at a gain of a little over $6,000, and I'm capped on the downside for a loss of a little over $4,000, or a little under $4,000, and that comes as a function of the credit. So we entered into this spread for about a credit, collected. This is pricing exactly $11 to receive that. So anywhere between the put that we're short, the 880 put, and the call that we're long, that 980 call, so almost $100 range, we're going to collect this $11 per share here. So if the stock stays relatively neutral, we have this relatively wide range where we will collect the premium that we received on the initiation of the trade. However, stock continues to go up, that's where that call spread is going to start to go into play. And we're going to start making money as if we were long the stock. Of course, we've sold the call on the upside. So at that upside short strike call, that 1030 level that we're short, we're going to, our gains are capped. So the max value of that call spread, $50 call spread, $50. We actually collected $1,000 on this overall package to get in, and that's where that $6,600 of total gains comes from. Our downside put spread, to the extent that stock goes down through that on the short side, we will see a max value on that put spread of $50. We collected $10 to get into this whole package. So if that put spread is worth its maximum value of $50 minus the $11 a share that we collected on the initiation of it, it's about $39 or $3,900 overall. Of course, 100 shares per options contract. So this gives you the exposure of being synthetically long approximately 100 shares throughout this defined range. So your defined cap on the upside is at that 1030 level, and your defined cap on the downside would be below the 830 level. So this is a really interesting way that you can actually receive money to act like a long MSTR holder with a defined range where you're going to make money, and actually a relatively wide, almost $100 range where you just received the credit that you entered into the trade for. So by combining these two different verticals, we can create a really interesting synthetically long position for relatively little capital outlay. Doing this type of strategy is great. We're looking at the March 19th expo here, but often that's the type of thing that you might want to continue to roll and adjust going forward. That's the type of strategies that Harvested Financial excels at, is the systematic execution of option strategies to keep you exposed to the theses you have about the markets. So check us out every morning here on the Daily Bread. We're talking about trade ideas. We're talking about different ways that you can access the options markets for the benefits of your portfolio. Also follow along on Twitter at harvested_DAFE, because derivatives are for everyone. Thanks again.